Hello, and welcome to the new age of risk analytics. In this episode, we'll take a deeper dive into the issue of model risk management with Tomasz Mostowki and Luther A. Klein, both from Accenture. We're here at the SAS Global Forum, and I would like to hear from you who you are and what brings you here today.
Terrific. I'm Luther Klein. I'm a managing director with Accenture and responsible for our finance and risk analytics practice across the US and Canada.
So I'm Tomasz Mostowki, and I'm leading our risk analytics practice in Europe, and I come from Poland.
First, I wanted to get your perspective on how model risk management intersects with a broader framework of operational or enterprise risk management.
Yeah, so I think that currently this is like part of the operational risk and enterprise risk. So the risk of the models is very big in terms of what can go wrong, and the financial institutions rely more and more on models, so less on the, I would say, expert knowledge, but more on the models. And we know that there are more models, the models get more complex, and of course then there is more risk that they will fail at some point. So the failure of a model can have substantial effect, financial effect on the organization. So this is, I would say, part of the operational enterprise risk as a whole.
Kind of further on that, I mean, I think what you're seeing over the last few years is the evolution of model risk, where, you know, if you go back a number of years ago, model risk was kind of an independent function within the organization, and what you're seeing more is the intersection of what is the impact of model risk and, you know, the reserve against models that now needs to be integrated into not only my operational risk framework, but my enterprise risk framework. And within that construct, what you're also seeing is through the evolution, I think if you go back a decade ago, you know, we had algorithmic trading models, right, that were evolving in the marketplace, and you had to balance, you know, it was really an operational risk focus if you look at the example of night trading. And what you're starting to see is through, you know, the new model frameworks, the new artificial intelligence models, the new machine learning models, we're starting to see that integration, if you will, and that intersection of, you know, where does model risk fit in and where does operational risk fit in, and that intersection is becoming tighter and tighter as we move across kind of the landscape today.
I think so, and I'm starting to get the impression, and I'd love your feedback on this, is that technology, along with what it's bringing toward us in terms of efficiency and scalability, is also necessarily requiring us to break down silos, which I think is interesting, that the innovation and technology is sort of moving the culture in that way. Are you seeing that as well, or is that just my perspective?
It's clearly shifting the way we operate in the business lines today. I think what you're starting to see as a model risk manager, if you think of where, you know, kind of my role the last few years, as a model risk manager, I focus more, you know, we focus more on enterprise models or enterprise analytics, but the new technologies are really shifting us to and really inserting models into the fabric of the first line, of the business lines. And what we're starting to, and what I'm really kind of seeing is, how does model risk get executed in not only through technology, but then it gets implemented through technology, but in the end it gets integrated into, or the evolution is that the impact of how does model risk impact growth and how does it insert into these models is really the foundation of where we are in the industry.
Yeah, I would also say that probably the technology adds the factor that you can really now oversee all of the models that you're having in the organization. Mm-hmm. So I think in the past it wasn't possible for anyone to really have the full oversight on what's going on. And now if you do it properly, you can have this, like, say, management overview of what's going on, are the models performing well, and also see this intersection. So sometimes, you know, one model has some influence on the other risks, which haven't been seen previously, and that's what you exactly saw, that this is breaking the silos. Mm-hmm. I think that this brings a lot. You have now people who can oversee bigger picture and really better manage the risk in the organization.
Can you give me some perspective on AI and machine learning? And I think what I'm hearing from people, the sort of party line is that it's going to increase efficiency and accuracy and all of that. Are we finding that it's all that's advertised? And then my second component of that question is going to be about how that's impacting, the sort of human capital of organizations. But let's just start with the technology itself. Is it as shiny and helpful as we're finding, or are we still in too early stages to determine that?
So I think that there is a lot of hype around AI and ML in general, and currently many of the things that needs to be done in the, let's say, model risk management framework does not really require you to have AI and ML. It's a little bit of the definition, how you want to define artificial intelligence or machine learning. I think there is a lot of place for automation, so intelligent automation. So to really do the repetitive task by the machines, I don't know, you can call it RPA, so robotic process automation. But I don't see at the moment like a big shift that will allow, to really build the models in an automated way. You have, of course, like the whole movement into new kinds of models that you can use the machine learning techniques to really build the models faster. But this is not a big shift. It's just for me, just a different statistical model that needs to be applied to the same problem. So I think that we are not ready yet for the AI ML, and I think that we have to do the basics first, and then we can move to the more advanced things.
Yeah, and I think you make an interesting point, which is we're in year one or year two, if you will, of a multi-year journey around artificial intelligence and machine learning models. I think in terms of the model development lifecycle, right, you aren't seeing a huge increase in terms of pace at the model developer level. But where I see a lot of value and what I'm seeing in the industry is the shift from where it was, 16 months ago, 18 months ago, where it was, let's try a proof of concept in these particular areas to see where AI and ML can drive benefit. And we've gone beyond that to where now it's how do I use AI and ML to drive value in the outcomes, whether it's across anti-money, the compliance agenda, anti-money laundering, fraud, the customer agenda, right, around how do I drive growth in terms of customer in specific micro segmentation variables. How can I drive value in terms of liquidity analytics or behavioral analytics for commercial or retail lending? These are all areas that are growing aggressively right now. So is it everything that it's mapped to be? I think we in financial services are limited to our use because of the regulatory paradigm, and maybe we can't do the self-learning models in many instances, but we have the ability to use use other mechanisms of machine learning, and these examples are really exploding in the marketplace right now, and we can take significant advantage from a value proposition perspective to each of the industries.
Well, I wanted to address, you mentioned a word that strikes terror in the heart of so many professionals, which is automation. So we're hearing a couple different messaging around this. Is one that it's going to streamline processes and it's going to, make jobs a little less banal and a little more strategic. Do we feel it's going in that direction? Should people be ramping up on new skills now? I mean, obviously it's going to change the career paths. What are you guys seeing and anticipating in terms of how people's functions are going to alter as a result of this new element?
Take that question. I think you kind of highlighted two different questions there. And I think the first question I'll kind of take is really around the new skills in the marketplace. And I think you are seeing a shift in the way, in the skill sets that are required. So before, I think even if you go back again 24 months, I look at traditional modelers or traditional analytics resources. I mean, you used regression-based lending. It was data-driven. Cycle times, for model builds can take anywhere from 6 to 18 months in most organizations. I think what's interesting about the new and kind of looking at the new AI and ML tool set is what we're finding is really I find three kind of unique things. Number one, I'm finding the need for resources to be be leveraging kind of some of the new tool sets that are available in the marketplace. A lot of the, in addition to SAS and kind of the capabilities that SAS has, you have to have the flexibility to also look at some of the tool sets as well. Number two, I'm seeing the need for more focus in terms of understanding and be able to drive insight on the data. So there's a lot of new insights in as we look at micro segments that I'm required to go after. What I'm finding is that it's not just about the regulatory agenda and the process. It's around how can I look at data differently and be able to kind of identify those new assets or new types of information. So I'm looking at new skills for the data scientists of the world, in addition to my traditional model risk skill, is really the outcome that I think we're starting to see. And it's this intersection which is shifting the way we as model risk managers are starting to hire in the industry. So it's not necessarily around automation as a negative. I think you're seeing the evolution and the explosion of models in terms of increased model inventories by 10 to 15% per annum. So I think so in this industry, we're still in a growth industry. The question is really around what are the new skills that you have to be relevant in this growth industry.
What do you think people should be focusing on that? And then we'll get back to your segment on that. What do you think if you're a professional in the industry and you want to ramp up, where do you think they should be keeping their focus?
So I think that the shift to the marketplace has moved, in my mind, from regulatory-based analytics to where it was solely based on the back office, if you will, credit, capital, towards I need now that information as a barrier to entry, as a baseline skill, but how do I integrate that back into the growth agenda, the value agendas of the organization? And so it's this shift that I'm seeing across the industry. So if I look at the growth in the number of models, it's in the impacts are in really three areas. One is compliance models, right? In terms of how do I use AI, ML for, I think I mentioned AML, fraud, and that sort of stuff. But the key growth areas are in, as I look at these, is in customer and in decision analytics in the first line and how I move to that business model. So it's a slightly different shift from my traditional credit view to how do I move and integrate risk and growth into the same analytic frameworks.
I think that's happening throughout the industry is there's this new perspective of, instead of saying the sky is falling, they're saying, well, there's a crack in the sky, but here's how we're going to make money off of it. I think that's a general industry shift that I'm seeing when I talk to people, but I could be wrong. Tomasz, please. Thoughts on all of that?
Yeah, there are a lot of things.
Yes.
And just maybe to add a few things to what Luther said. The industry is growing, so the number of models is growing at a really fast pace. And in many organizations, the amount of money that is being put into it is not growing in the same pace. So you need to do more work having the same amount of money. So you really need this automation in order to keep up with the growing numbers. And I think that a lot of tasks that are being currently done in the model risk management are not really very interesting, to be honest. So a lot of data cleansing and performing the same statistics that you have done already 100 times, it's not what people really like doing. And they do it because they have to do it. And I think that this automation frees up the capacity and allows the organizations on the one hand to do the same amount, so do more job with the same amount of money. So that's one point, and make the job of the especially model validators more interesting again. And you ask also the question about the skill sets, and I think that there are a couple of things into it. First, I think that the change in technology and the democratization of data allows more people to look at it. So you also have people in the management area who need to keep up with the new technologies and new statistic solutions in order to understand what's going on with their models. and they have now the capability to really see how the models were developed, how they've been validated, what are different statistics around the quality of those models by a click of the button, and they should do it, and they really need to train themselves in this new area. So it may be not a huge shift in, I would say, the statistic that's behind it. So many of the things that we are doing have been developed in the 70s. It's like we just have more powerful computers. We can put more data and do it faster. But some of the things are quite new, and they need to understand the problems that are with those models. And on the other hand, you have the model developers and the validators or the quants that are really doing the job, and they need to learn all of the new techniques. So now you really need to know, Python, for example, to keep up with the market. And then you probably will have a little bit more time, so maybe this time you need to spend more on thinking if your models are working properly and not just ticking the boxes that are needed written in your policy, how you must validate your models. And this also requires this new skills to think really critically about how the models have been built, how they are being used, what is the risk on the market. Maybe there's a risk in the broader economics, maybe there are new entrants that will really change the market, and you need to take it into account. So I think that I would say that there are two things that people need to have right now. One is the will and ability to learn new things fast, and the second is to be open-minded and really look for other ideas, other areas, other angles to it. So talk to different people and look how it's being done.
Definitely, it seems like it's forcing us to work smarter and not harder, which is, usually just been a poster in somebody's office, but now I think it's being, sort of
I fear that it's going to be even harder. It's like it's not, the automation will not save us. I think we will still need to learn and keep up with the world with an even faster pace. It's like this. I don't know how exactly it was in English in the Alice in the Wonderland. It's when the Queen says we need to run really fast to stay in the place. It's I think it's what we are seeing right now. So people really need to run very fast in order to stay in place.
That's a very good analogy. Thank you for that. What are you finding are some of the challenges in terms of model governance in this new framework? For people who are still ramping up on the technology, for people who are still understanding the capability of the technology, that means you have to work lightning fast to make sure there aren't gaps in it. How are you seeing the sort of model risk framework changing?
From a model risk governance perspective, we're seeing a significant shift in order to manage not only the legacy models, but also the new frameworks that are coming into play. And so artificial intelligence and machine learning is really shifting on multiple dimensions. One is, how do I manage, as I have models that are learning and driving variable selection, only on a decision by decision basis, how am I managing not only the explainability and transparency of those models, but then secondly, how am I using that data to drive and identify specific biases or other adverse implications that these models are producing? So from the dimensions perspective, number one, we're having to put sizable monitoring as well as risk management governance around each of these models. And so what we're starting to see is some of the initial proofs of concept 2 years ago on very specific use cases. If they're not wide enough, the monitoring costs of AI and ML actually far exceeded their benefit case. And so what we started looking for is we needed to have large enough business cases, large enough outcomes in order to drive the benefit case across this overall footprint. And ultimately a commitment to drive the functional outcomes that we would require. And so with that being said, what we're starting to see is what we've now starting to get into is not only are we seeing the evolution as I start driving the documentation, the transparency, the outcomes, what we're starting to now evolve into is we're starting to see new instances as we build the data sets of variable selection, as we build the data sets of the learning models, we're actually seeing new types of bias where historically we never would have considered before in customer models and decision models. And we're able to evolve just based on the analytics themselves and the data and the history themselves. We're actually to see new insights and new capabilities. So this is really kind of the area I think where we're going to spend quite a bit of time in the industry over the course of the next really 12 to 24 months as this marketplace evolves.
I have nothing to add.
That's perfectly fine. What are some of the best practices that you're seeing that you'd want to steer people toward, in the adoption of new technology or in the current environment?
That's I would say a tough question in general. I think that it really depends on the size of the organization and on the place in the journey where they already are. So there isn't like a silver bullet that will solve all of the problems, and it really depends on the size of the bank. If it's like a relatively small or mid-sized banks with hundreds of models, or is it like a big bank with thousands of models? And depending on which technology you already have, and you really need to think probably critically where you want to go, how you want to get there. So what is the roadmap? How much money you want to throw at it, because it will be costly and it might be nasty at some point if you're gonna do it. So I would probably start with really having a good plan for it and not saying, we'll just move into this direction. So you really need to see the problems. So the models are interconnected with other problems with the organizations. So we hear now a lot about decoupling of the old systems, how you want to shift into news, how you need to keep your legacy systems and in the same time try to turn into the new world. And it has also the impacts on your model risk management, on your data, on the availability, and you really need to do it across the organization. So it's not like, again, siloed solution that you can say, we will do it, and you do not look across the board.
Thank you. Did you have something to add to that, Luke?
Yeah, I think there's two dimensions I think about here. Number one is from an individual perspective, best practices. I think it's really simple. Regardless of the technology and the tools, it's really simple. One, always be learning and adopting the new tools and new capabilities. I think you have to be open to those tools and you have to embrace them at the end of the day. It sounds so simple, but so many of us are kind of so focused in what we do in and day out. We have the repeatable task to then go and execute, but be willing to adopt the new tools and new concepts and understand where they fit in. Number two, make sure you understand where the value proposition is. And what I mean by value is understand, and you guys, most people make the trade-offs in their day-to-day lives, but understand where the value is for the capability and make sure to understand, does it fit in for that purpose? Whether it's, how deep of a validation am I going to do versus a high complex model versus a low complex model? Or it could be as broad as what's the complexity of the technology tools in terms of automating model validation documentation, and can I integrate these capabilities into my footprint to drive speed to market? Understand the value proposition of the solution so that you understand where it fits in. From a technology perspective, I think what we're really seeing, I think the last key thing that I would add in is there's really two dimensions on the technology dimensions. Number one is we've seen this evolution of point solutions. We talk about it when it comes to micro-segmentation. We talk about it when it comes to, getting AI and ML gives us the ability to go very granular in our capabilities. the key that you have to think about in terms of the technology footprint is understanding the data and ensuring the data quality and data completeness up front. And number two is ensuring that whatever we're building is integrated into a enterprise analytic framework. So what I always see in technology is a bunch of proliferated point solutions that become unwieldy to manage, control, and execute. And we end up spending more time managing the implementation, running the execution, than integrating the outcomes. We equally have to spend as much time understanding how to build the model as well as how to integrate the model into our new footprint.
All of that was incredibly insightful and articulate from both of you. I really thank you for taking the time to speak to me and for the benefit of our listeners today. Thank you so much for your time. I really appreciate it.
It was a pleasure.
And I hope you have a great rest of your day.
Thank you so much.
And thank you for joining us on the new age of risk analytics. Please subscribe on your favorite podcast platform to be notified of future episodes and visit sas.com/risk for information on these and other risk topics.